Why do credit card bills get more expensive? Who gave my credit card permission to charge me more? I swear, I used the same card, bought the same kind of stuff, and now the bill is looking at me like I missed a whole month of payments. Same card, same me, but somehow the bill got a promotion. Who approved that raise? And if I already owe you the money, why can the cost of owing it keep changing? I didn't borrow another dollar. Why does the same debt keep getting more expensive? Who decided I should pay more just for carrying the balance I already have?
Well, because the balance can stay exactly the same while the interest rate changes. So you can stop spending, owe the same amount, and still pay more to carry that debt. The money you borrowed didn't change, the cost of keeping it did.
Wait, Mr. Towell. If the rate can change after I borrow the money, what happens to millions of people already stuck with that balance? They're not borrowing more money, so why can the cost keep climbing? Who's supposed to answer for that?
Because the Fed doesn't set the rate printed on your credit card bill. But when broader interest rates move, they can affect the rates banks charge. And with some credit cards, that can mean the rate you're paying today isn't the rate you started with. You can stop using the card, keep the same balance, and still watch the interest pile up faster. That's when a balance that once felt manageable can start taking much longer and costing much more to pay off.
So millions of Americans can be making their payments, stopping their spending, and still watching the cost of that debt climb? If the rules let the price of borrowing change after the money is already borrowed, who is this system actually working for? Because it sure doesn't feel like the person holding the bill has much say in it.
Order. Stop right there. So the Fed doesn't write the credit card bill, but its rate decisions can help change the cost of carrying that debt? Mr. Towell, please answer me. How does a decision made at the top end up hitting an American's wallet at the bottom?
Well, Your Honor, a credit card rate isn't just some number sitting on a statement. It can determine how much of that monthly payment actually goes toward reducing the balance. When the interest rate is higher, more of the payment can go toward interest before the balance gets meaningfully smaller. So someone can stop spending, keep making every payment on time, and still watch that balance move down much more slowly. They're making payments, but less of each payment is actually knocking down the debt. And the longer that balance stays there, the more expensive it can become to finally get rid of it.
Wait, Mr. Towell. So even if I'm making every payment on time, I could still be stuck with that balance for years. Then the minimum payment isn't really getting me out of debt. It's just keeping the debt alive. How is an American supposed to plan a way out when the number on the bill doesn't tell the whole story?
Order. I think we found the part millions of cardholders need to see. If a person can make the payments, stop spending, and still watch that debt take years to disappear, then we need to look beyond the number on the bill. This hearing isn't over. Next time, I want to see exactly where that money goes and who gets it.